I'd like to thank everybody for joining me today. Today, I want to talk about questions we should be asking ourselves if it's time for us to change or upgrade our life insurance policies. If you think about life insurance, we buy these policies and we have different goals for these policies. Of course, it's life insurance. Most of the time, it's for a death benefit. We need to make sure that we have that death benefit in place to pass wealth on to our heirs, take care of our surviving family members, so help our business, protect a spouse. All of those things revolve around the death benefit. There's also other, riders that are in these policies now, like long-term care. Do we need long-term care? Is that a goal of this policy? And finally, is the cash value. And with cash value, do we have that life insurance policy designed to create cash value growth that's deferred and can be accessed tax-free, or would we want that? So as you look at your life insurance policy, we need to do some self-inspection here and look and say, have things changed in our lives that might change what we're doing? And as we're doing this, what is the goal of this policy, or are all three important? So when we start asking these questions, let's start looking at these. After you bought your life insurance policy, have there been life events that have happened that might change your mind on the need for this policy? If you think about it, is there a marriage, a divorce, a birth of a child or grandchild, death of a loved one, or change in your business may affect the need for this life insurance death benefit? Maybe it needs to go up. Maybe it needs to go down. Maybe we don't even need the policy anymore. So if we're asking these questions after these major life events, we're going to get an answer of what it's going to be. The next question is, have your goals changed? Think about the reason you bought that life insurance policy. Have things changed to where your goals no longer meet what this policy is going to deliver? There again, it can be an increase or decrease in the death benefit. It can be a change to where now I want, life insurance to be designed for tax-free retirement. So I've got that tax-free access to the cash value. I might want more guaranteed death benefit, less guaranteed death benefit. Or I might want to have these riders that now provide long-term care or long-term care type benefits. There again, as your goals change through life, we want to make sure that your life insurance policy matches those goals now. Has your need for death benefit increased or decreased? Now, we don't think about the need to decrease our death benefit, but there again, what did you buy the policy for? If it was there to protect your business and you no longer own that business, do you want to keep the policy? Do you want to move that over and incorporate it into your estate planning? There again, there's no right or wrong to these answers. It's just making sure that we match up what you're doing now to what you should be doing with your life insurance policy. I talk to a lot of clients that their ability to pay premiums have changed. There again, some people, I want to decrease my premium or eliminate my premium. If you're going into retirement, do you want to keep making premium payments? Well, if you have a set income coming in, maybe it doesn't change. But if your income is going to decrease, maybe we should look at decreasing your premiums. Or you've matured in life and your kids have moved out of the house, you have more spendable money. Now maybe it's time to increase your premiums. Or with your business has grown, we can increase that premiums to there again generate more benefit from the life insurance policy. A lot of people buy term insurance. There again, term insurance solves a lot of need. Basically, and when we're younger, it gives us the ability to buy the death benefit to protect our family and loved ones, or protect our business to get a term insurance policy to cover a loan for the business. All of those good reasons for buying the term insurance. Now we have to look at it. Is that term going to expire? Well, it was cheap to buy it because it's like renting. Well, at the end of the rental period, the price goes up. So if your term insurance is going to expire, this is a good time to review that and say, do we need the policy? Do we need the death benefit? Do we need to add these other benefits? Or can we let that term policy go away now? There again, match it up to your current goals. Looking at the duration of your policy, and this is something that I don't think a lot of people understand. Policies have duration. So you might have bought a policy that is guaranteed to last throughout your life. So in today's world, life insurance policies can be illustrated out to age 120. Now, it's probably not realistic needing it to age 120, but if your policy was only guaranteed to age 85 or 90, and you have longevity in your family, well, you might want a policy that's guaranteed age 100 or age 110. Something that you know will always be there. Now, there's the guarantee and there's the non-guarantee. So we want to look at both. Guaranteed means no matter what happens, the death benefit's there. The policy will stay intact. The non-guarantee says as long as the interest being generated in this policy continues and the charges in the policy don't increase, then we can illustrate, okay, how long will that last? So we want to look at it and say, is the duration going to fit what you want it to? Do you want guaranteed, set in stone, this will be there? Or do you want it to be managed on the non-guaranteed side with the expectation that you might have to do more for that to that policy to keep it in force later on? There again, we don't want that policy to lapse and you get that letter from the insurance company that says you no longer have coverage when you thought the coverage would still be there. One of the new benefits to life insurance, and it's been around now for a number of years, is you can create a life insurance policy that has either a true long-term care benefit or a chronic illness rider, which mimics the long-term care benefits. Typically, with the long-term care rider, you're going to pay that for that upfront. And with a chronic illness rider, that's added to the policy, but you don't pay anything for it unless you need it. So the nice part of this is think about taking care of you. We always plan for taking care of others with the life insurance policy with the death benefit. If I die, somebody gets the benefit. But now we can look at the what's in it for me and say, if I'm alive and I need long-term care, you can accelerate that death benefit to take care of you today. So if that's something you want, then it's looking at it saying, can we take your current policy and transfer that into a new policy? Or does it make sense to buy a brand new policy, and what would that cost? Finally, looking at the cash value. We talk about cash value in life insurance because it's a unique feature on life insurance. Is you can overpay the premium, and that extra part of that premium will now go into cash value growth. And that cash value will grow tax deferred. And if you take it out the right way, can be accessed tax-free at any time. So if the policy is properly designed and you've got that growing cash value, when you need it, you can access it tax-free. There again, if that's something that you would like and that's not on your current policy, we need to update that policy. We should always make sure the beneficiaries are accurate. So if there's been a divorce or there's been, new kids have come along or grandkids that should benefit from this policy, do your beneficiary designations in the policy match up to what you want to have happen? Finally, in the estate tax world, life insurance is typically income tax free, but we can do a little extra planning to make it estate tax free so that it's free from estate tax, and we can set it up so that it's free from your creditors. In the majority of states, life insurance is a protected asset, but not in every state. So if you want to make sure that policy is protected from your unknown creditors, there's things we can do to make sure that happens. Finally, have you taken loans or withdrawals against the policy? If you have done that, we wanted to make sure that those policies don't inadvertently affect the longevity of your policy. So you might have to repay the loan, reduce the death benefit. There's things we can do to make sure that policy continues if you're not going to repay those loans or you've taken too many withdrawals. There again, let's make sure that policy stays intact like you need it to. So with life insurance, it's like finally, putting that last piece to the puzzle. It's a great fit to a lot of planning if the planning is done correct and the policy is designed to meet the goals and objective that you're after. So I appreciate everybody getting on. If you have questions, reach out. If not, we'll talk next week. Thank you.